What's up guys, welcome to today's video. My name is John and I'm going to be a trader for today. So, we have this coin, it's called LINA, and look at this price action. It did from the bottom, that was I'm on a daily, but from the bottom it did 265%. But more like if we look at it sort of like what the actual pump was, it was something about 123%. And today I'm going to teach you a bit about how extreme short squeezes work, how I would trade this, and can this continue any higher. So let's take a look at this. Sort of from the price action standpoint, we were just ranging for a while, and then bam, and it was extreme, big move to the upside. It was, the actual pump was about 98%. So how can you tell if something like this is going to happen, and how can you trade this, and would I short this right now? So every time when you see pump like this, there was a fundamental behind it. B, there was short squeeze, which is probably will happen here, and C, and most likely both of them. So whenever something like this is happening, there's usually a catalyst. All right, so in stocks, what happens all the time is that stock is just going to zero. It's having negative earnings. The company balance sheet is just a mess. Their financials are just terrible, and everyone starts to short it. That's what happened with the GameStop. And then basically, when you're short, you have liquidation at some level, all right? So I'm going to tell you a story of short squeeze, all right? So let's say that this coin wasn't moving at all, because it was underperforming, all right? When we take a look at Bitcoin right now, new price scale, we can see that from this point where Bitcoin started going up, we didn't see that much of a rally, right? So it was underperforming the whole market, and probably what a lot of people thought is that it's just that, and it just has no future, so they probably entered a bunch of shorts. We're going to look at some data later, but that's basically what happens on the stock market as well. Yeah, basically a lot of people start to short because there's bad situation about it, or there's some catalyst that's telling you to short. And then let's say that the first majority of highly leveraged traders are going to get liquidated about here. Then the next majority of traders here, then here, then here, and the last ones on, let's say, 2x leverage are going to get liquidated here. And what's going to happen, this is how short squeezes work, is that when you're short, you have to buy back, all right? So there could be, when you see a data and a lot of the shares or a lot of contracts are short, then someone usually tries to manipulate the price higher. So maybe by adding a lot of limits here, or just some sort of algo, or just showing their size and pumping the market higher. That's sort of what happened with GameStop and Wall Street Bets. Everybody on Reddit started to buy, so the price starts to move up into our first liquidation zone. Here it hits the most leveraged traders, who have to buy back with size. So it's just going to rally to the next zone. They have to buy with their all size. Then it's going to hit the next zone and hit the next and next and next and next zone until it liquidates sort of everybody. So this is how short squeezes work, and you really have to look at it that fundamentally. So now let's look at the actual data. And one more thing, the more the coin is illiquid, the bigger impact the short squeeze is going to have. So let's say that we're looking at Bitcoin. Bitcoin is very liquid. There's a lot of volume, so it's hard to short squeeze something like this. But if we have something like LINA, where it could, the daily volume, I don't know what's LINA's daily volume, trading daily volume, but let's say that it's $1 million, then short squeeze is much easier to like take place because there's just not that much volume. And we're going to look at why. This is my setup for spotting short squeezes. Let's go with these two for now, and then we can have liquidations, aggregated liquidations. All right, and this is basically what you need to know. So the most important thing for spotting a short squeeze would be these two: long short ratio and open interest to market cap ratio. You can find this on Coinalyze. And it's really important that it's a market cap ratio, because I'm going to open it. When I talk about that, you really have to gauge liquidity in comparison to the amount of shorts and longs that are in the market. So meaning that you really have to tell how big is the size of those contracts that are currently in trading derivatives, because here at the top 50% of market cap were open contracts on derivative position. So half of the market cap was basically short, or the majority of the derivative position were short. This is not healthy, because 50% of contracts being traded on derivatives is just massive. It's just massive, and it's not sustainable. So you can expect very high volatility. And what happened here, alright? So I'm going to tell you the story. Sort of here, when we were ranging for a while, nothing major. But we had a pump about 25%. So that's quite a lot. Probably Bitcoin was pumping as well, or there was some catalyst, some news released on this coin, and the first wave of shorts just entered. We can see that shorts were sort of entering here as well, but in a much smaller size. It's very hard to tell, but maybe the overall trend was a bit short, but probably there was some catalyst released, or just somewhat bought with size, and people said, oh, look at this pump doesn't make sense, let's short it. All right, so what happened is, from 16% of market cap that were probably mostly in shorts, this market cap to open interest ratio rise up to about 26%. And when you see something like this, and the price isn't really doing much, so just ranging for a while, open interest increasing and shorts position also increasing, meaning people going short, this is a good sign for a market maker, or a market maker incentive that he wants to push the price higher. So what happened here is that after people started to after people saw this 20% pump that wasn't really making much sense, probably open interest, they increased about from 17% to 30%, which is massive open interest increase. For example, Bitcoin current open interest to market cap ratio can be about 2 or 3%. So this is a lot of people trading derivatives, and all of them basically were just short. So people betting on price going down. So what happened is that we liquidated them. We absolutely smashed those shorts with a move of 33% to the upside. Look at this funding rate. This was crazy. This funding rate, 1.7%, which means for every, I think, 8 hours, you're getting paid 1.7% if you're long. So there's massive incentive to be long, because there are those many shorts. So people were shorting this whole uptrend, all right? People were shorting this whole uptrend, and you can see how much shorts we just liquidated. At this point, it was 16%. So this was 16 millions. This was all of the people from that range getting smashed. That's just crazy. And what happened here is those shorts that were entering here, there were a lot of them. Market started to move a bit downwards because we probably ran out of demand. And what happened is that these shorts that were now at break even or unprofitable, they started to close positions. So this is closing positions, all right? People going out of the shorts, Let's see here. And what this is telling me, that the market maker probably doesn't want to take the price even higher. So this may dump eventually. Let's see if those people regain confidence in shorting. But a whole lot of people that were opening positions here became very nervous so they started to close position as soon as they could. So from 50% of market cap in derivatives, we went down to 28 currently. So basically half of those derivative positions already closed, those shorts mainly. So this is telling me that market is probably, if market lets them close their position, it's probably bearish enough for going into lower levels. There could be some fundamental news on this coin, so watch out for that. But yeah, funding rate even flipping to the green levels, which is telling me that this can probably dump. And I'm going to tell you my combo. What I would do is, there's a lot of speculation still on this coin, so probably it's quite risky. But what I would do is, I would short these levels. By the way, my blur prediction last time, blur is down quite a bit. We can take a look at that as well, but I don't want this video to be that long. Yeah, I would short these levels, and then I would probably long BTC and ETH, so the majors, as a hedge, because I think these guys look pretty bullish. Just I was looking at more data, but just look at this strong resistance created by this range, this whole sort of area here. This is really good, really strong support. Support is holding until it breaks. So it's every time we jump over support, it's weaker and weaker, because these everyone who wanted to buy here already did the last time. So it's becoming weaker and weaker and weaker. But probably around here, or I would wait a bit. I would take a long at BTC, ETH, and a small short at LINA with stop loss. You wanna do stop loss on LINA? Yeah, do some tight stop loss and short it, because this could be a very good play. And long T majors. So that would be kind of my play. And we can take a look at our blur prediction from the last time. So we didn't hit our target here because it was really bearish, like I said. But I was correct on its bearishness, because it went 30% down. So it underperformed the market quite massively. When we take a look at Bitcoin, yeah, we can see that here it was about the same, but then blur started to underperform massively. So you can see that the data that we were looking at were quite relevant, because it actually worked. So if you would have taken the short position, you would have been in quite a lot of profit by now, because it's really down a lot. So okay, that would be my take on Lina. I'm pretty bearish on this, but you have to watch out for people regaining confidence in charting this, because it's quite risky. So only use stop loss on this. Do tight stop loss. Uh, take a look at your risk management and decide. I'm not going to give you exact targets here, but it can go down a lot, because we ran out of we liquidated everyone that we had to, so we can now erase basically this whole thing. So 33% down and long D majors. So that would be kind of my play. I hope you learned something new today, and trade only if you're confident in your skill set. All right, guys. So leave a like, leave a subscribe, and until the next video, bye bye.